So you have the global perspective. You have a refined view. How do we filter out the nonsense? How do we filter out the noise? Well, we could look at volumes, aggression, and breakout of recent ranges. That makes sense. So, have you ever really seen the market do a slow, curved change in direction? It's very rare when it does. It's very rare, maybe 2% of the time. But buyers and sellers will always band together. And I'm going somewhere with this. But when they band together, it's either buyers who are the aggressors or sellers, with a little bit of riffraff in between. But look at the charts. Take a peek. Any chart. And what you will see are clear ranges of upward channels or downward channels. Let's simplify it. Those are ranges, whether they're ascending or descending. Now, in order for price to change direction and break outside of those little channels, whether they're up or down, you have to have a change in volume. You must have a change in volume. But how do you identify volume if you don't have volume on your platform? Well, that's where volume becomes important. But volume isn't available. Not in the traditional sense, not in what you would think. But most traders don't understand that volume is a misinterpretation or even a misrepresentation in most cases. Because the institutional venues, they provide compulsory requirements that in contributing a bid or an offer, I must also submit the other side of the market. Meaning, if I'm a buyer, I have to submit an asking price too. Wait a minute, I don't want to. Oh, that means the compulsory order is going to be high away outside of the market. Off market is what it's called. But that means if I'm just one of millions of other traders who are making markets, that means half the orders are compulsory. That means half the orders are nonsense. Well, now we can go someplace with this. So if half the orders or approximately are compulsory and nonsense, that means what we've got to do is narrow down that range. Narrow down that range to which we observe core volume. That's the aggression. And when the aggression changes direction, you remember those little channels of upside or downside moves? Well, now you recognize how they change. But volume is the second thing that happens to transition direction, long before price. What's the first, you say? Oh, market sentiment. That's the vacuum that comes from all the exchange rates, and that entices the aggression of volume. And when the aggression of volume changes direction, now market makers, being the big banks, who trade 95% of their daily activity as aggressors, just like you or I, transition from their market-making phase, which is only 5% of their daily volume, into aggressive speculation. So when the price breaks out of that little range, who's selling? There you go. That's the banks. That's the banks that have the wherewithal to push prices outside of that range. And then as it breaks outside of that range, it's going to create a new range. It's going to do this and then break another one and then break another one. And so it's always little diagonals of breaches in range. Very rarely will it give you a curved move. And that's just a lack of volume. It's a lack of intent. It's a lack of aggression. It just happens to go. It might be a couple percent at the time. So look at the charts a little bit differently. And I guarantee you, the structure that you want is already there. But in trading on price action, you can't recognize those because you don't know where volume transitions direction. I show you that. I give you the volume aggregation, and it's filtering down to those ranges. Now, those ranges we call bid, ask, bounce. And that makes sense because in those ranges, prices are bidding, and then breakdown. It's breaching outside of the range of bid, ask, bounce. So you've got the global picture in mind. You've got the microstructure. You're looking at that range of bid, ask, bounce in order to time your entries precisely when the banks start to sell. So if you know when the banks are selling and you know the conditions to which the banks are selling, what that allows me to do is front run the banks. Now, who becomes my liquidity? The banks. Flip the scripts, turn the tables, and trade a little bit more intelligently. And that's what we do at iForex.market. See you on the flip side.